Okay, good afternoon. We are getting down to financial accounting, financial management accounting. Of course, in this class, we are now going to look at the unit structure in terms of accounting cycle, the steps in accounting process, then of course, also getting down to the posting of transactions, the accounting equation, and the double entry system. So these are the three things that you're going to look at. And of course, here we'll look at what we call the ledger accounts. So we'll look at the ledger accounts in short. Okay. Now, the posting transactions, accounting equation, and the double entry system. So in accounting, like I mentioned in the other class, it's all about double entry system when you are looking at the posting transactions. We are simply saying that we look at the double entry system in a nutshell. So double entry system. So under double entry system, we debit the receiver and credit the giver. Okay, so we credit the giver. So meaning that the one giving away, the money is going. So when you prepare a T account, this T account, this is on a debit side, this is on a credit side. Okay, of a transaction. Now, what is going to happen here is that if we look at okay, the three things here, the posting of transactions, this is the cash, posting of transactions, the accounting equation, double entry system. The posting of a transaction simply indicates that the transaction is coming from one individual to another individual. Okay. This is where these two can be combined, the posting transactions and double entry system. The accounting equation our accounting equation is just given by total assets. So total assets is equal to total equity or capital plus the total liabilities. So this is an accounting equation. Okay. Now, without wasting much time, accounting is all about double entry system. Accounting is about, okay, double entry system. So let us now look at double entry system. Whatever it is that accountants do, they look at only the double entry system. Understand where the money is coming from and where the money should go to. So under the double entry system, looking at the, okay, account information system, we have the inputs and outputs here, but let's go down to the double entry system. We need to explain the double entry system. These are the things. We'll come back a little bit. Let's go and explain the double entry system. Okay. So, like I mentioned on accounting equation, total assets go to capital plus liabilities. Want us to get down to double entry system. If we get down to the double entry system, we can look at this example here on a double entry system. On 1 January 2019, James started business called Jamo Limited. James deposited 160,000 as share capital into a bank account. So the two accounts that are affected are what? James deposited 160,000 as share capital into a bank account. So here, what is happening is that we have, okay, bank account, and we have the capital account in this case. The two things that are involved in this one. We have a bank account and we have a capital account. So we'll show this one just now so that you see what is going on. So as you can see here, it says on 1 January 2019, 1 January 2019, James started a business called Jamo Limited. James deposited how much? 160,000 as share capital into the bank account. So meaning that the capital account was giving away because that money went to the bank. So meaning you say 01, okay, 0119, the bank received. That's why I'm putting it on the debit side. The bank received 160,000. And how do we indicate this? This is coming from capital. Okay, so you debit the receiver, it's a bank. Credit the giver. So here, the bank was on the receiving side. This person, on the same date, credit the giver. So meaning, when you're crediting, we are giving away. So meaning, this is in accounting only. Don't confuse with banking. In accounts, simply means when you're giving away, it's a credit in accounts. Okay, so this is a pure accounting. So when you're giving away in accounts, it's a credit. So here, on the same date, 01, 01, 19, where you say this one, the money came going to the bank. We gave this money, but it went to the bank. Over how much? 160,000. This is it. This marks the complete of a double entry system. Okay. So this completes the transaction as at this point. James deposited this one. Okay. So James deposited 160,000 a share capital into the bank account. So The double entry system that should be there is the capital account. This money came from the capital and it was deposited into the bank account. So the capital account gave away and went into the bank account. So these are T accounts which are called ledger accounts. So these are T accounts, or you say ledger accounts. So this is the T account. It's a T because it's called the T because it has this T. All right. So now you can continue preparing the T accounts. Okay, we can continue preparing the T accounts on the double entry system. So this is the basis of accounting. Accounting is all about the double entry system. So this is my emphasis in this class. Once you understand the double entry system, the other things you'll be able to understand them thoroughly. The double entry system accounting is characterized by the following features. Each transaction requires 2 entries to be made. Okay, so you have 1 debit entry and then 1 credit entry. So to complete the double entry system, that's what we have. Okay, so now for each transaction, this means that the bookkeeping entry will have to be made to show the increase or decrease of one element and another entry to show the increase or decrease of the other element. So in double entry system, so instead of constantly drawing up statements of financial position after each transaction, okay, we have instead the double entry system. So an account is a place where all information referring to a particular element, assets, liability, and expense is recorded. Now, the basis of entry system is where we say each account should be drawn on a separate page in accounting books. The double entry system divides the page into 2 halves. The left-hand side of the page is called a debit, meaning that as we do the T account, we have the debit and then we have the credit. This is what is going on here. So the left side of the page is a debit, the right side is a credit. So the title of each account is written across the top of the account at the center. So you do a T account, the debit in this side and the credit. All right, so let us get into the examples of T accounts, the T account, debit and credit. Okay, so what are the debits? Debits refer to the left side and credit refer to the right side of the T account. Okay. Now, debits and credits are used to increase or decrease the account balances. Okay, so we can look at now the actual. So now here, rules for the double entry system bookkeeping. For an asset, you debit if you are to increase an asset, and credit if you are to reduce, meaning you are giving away assets. You are giving away your vehicle. So assets are reducing. Because when you are doing this, credit, you are giving, debit, you are receiving. So if you are to increase an asset, you actually debit so that they continue coming in. Then credit, you give away. So here you give away. So this one you're giving away. Then here you are receiving. So it's a receipt and this one is a giveaway. All right, so now the most important thing here about double entry system is that you just understand the debits, that's an emphasis, and the credits. So let us look at this example here. This is a comprehensive example that we can look at here. Comprehensive example, they record the following transaction in the books of Moyo Limited. They want us to do this question. We're going to do it together, and I'll be very slow to explain this one so that you'll be able to understand this this one thoroughly. So let us get to this comprehensive example. Other things I will explain after we finish up this example, because this is the one we are looking at now. So it says 1 January, Mrs. Moyo started business called Moyo Limited and deposited 5,500 in a bank as share capital. So what would be the double entry system here? The double entry system on this one will be that this person has started a business with 5,500 in a bank. We deposited in the bank as capital. So what is going to happen is we will open up 2 accounts. The bank account and of course the capital account. All right, so now what on this date, the date was what? It was 1 July 2019. 1 July 2019. So 01 07 19. This capital went to the bank. So that's why we are crediting it. This capital gave away, and this money went to the bank. How much was it? 5,500. Okay. Then this is a debit and this was a credit. And I have to make mention here that capital has always the credit balance. Why? Because when you have capital, you invest it in the business, you give it away in the business. Or when you have capital, you give it away to the bank, you deposit in the bank. So that capital goes to the bank. So it gives away. So meaning here, the bank received on the same date to complete the double entry system. When there is one entry credit, there should be a corresponding entry, which is a credit or debit, depending on what we have. So this is on capital. So we're getting what? 5,500. So this marks the end of the first one. Okay, I'm just concerned if people are following. Are people with me so far?
Yes, we are.
Yes, we are.
Yes, sir.
Okay, so let's look at the transaction for. So assume that you are Mrs. Moyo, and you started business with that amount. So what received was a bank. That's why the bank received. That's why we have the debit side, a receipt. Credit is a payment. So capital got given to the bank. So credit and debit. So we can get down to the other one. Now, July 2, purchased goods for resale on credit for 540 from Trade Kings. So we bought goods from Trade Kings. So you're going to open two accounts. One account you're going to open is the purchases account. Then the other one is the Trade Kings account. Now, since we bought from Trade Kings, these are our creditors. When we see them, we should really be running away if we fail to pay them. So that is on July 2. Okay, so July 2, you're going to have the account where we say purchases account and Trade Kings account. Okay, so you can even do it this way. Maybe on the next page. Purchases. Account and the Trade Kings. So you know that this is a debit and this is a credit. We have the debit and the credit here. So it was the purchases were on the receiving side, so it will say 02 07 19. Then you have this one, we have the Trade Kings. So this one we have trade, it came from, so these purchases came from Trade Kings. How much was it? It was the 540. So you put the 540 there. Then here you will say on the same date, you record the date is very important because if you don't put the date when auditors come, then it will be very difficult for them to actually know which date was it, or maybe you had intentions of getting money. So you put purchases on this one. So it went from purchases. How much? 540. So this marks the
Hello,
yes, boss.
question.
Yeah.
Okay, I want to ask on the name for purchases. Why haven't we put it as accounts payable? I don't know if I'm confusing myself or what.
Okay, so account payables, those account payables, those are our creditors. When you say account payables, it means we are talking about like here, the Trade Kings. These are our payables, meaning that these are our creditors. Okay, so this one, these are payables because we are buying from them on credit. So account payable simply means creditors or payables. You get my
So
point?
can we make purchases as accounts receivable?
No. Account receivables are customers. Account receivables are called customers, okay, or debtors. So debtors, I'll show you the account receivables as we go down. Purchases, these
All
are
right. Okay.
so these purchases, these are stocks. The stocks of the inventory that you buy maybe in a shop for a resale. Okay, so these are called
Okay.
purchases. Yes. So
Maybe
these purchases are
was
yes.
sorry. What confused me was the. Maybe go back to the question. Maybe what confused me was the word on credit. Maybe that's what got me confused.
Okay, so we bought goods from we bought purchased goods for resale on credit for how much? 540 from where?
Trade King. So the word on credit is what confused me, I think.
Okay, so
So I
now
was thinking.
okay, so listen, we bought these items on credit, not so. So from where?
From Trade Kings.
So if I buy something from you on credit, you'll be my creditor in account. So meaning that you are my payable. You are my payable or you're my creditor because I bought from you the chicken on credit. Meaning that if I see you around and I haven't paid you, I should run away from you. That's a term payable.
Okay.
So that's what it means by payable. I can run away from you, or in accounting, the other accounting term is called creditor. So you'll be my creditor. Okay? I'm sure.
Okay. All right. I think
I'm sure I've
no.
understood. I've gotten it, huh?
Yes, I have.
So you'll be familiar with these accounting terms. Let me just write down properly on the purchases because the space there is too little. Let me just bring it down. I'm trying to, it's the same one, but I'm just trying to put it down here so that at least we have enough space. So here, this is on debit. This is on the credit. And this is it. This one is called purchases account. Purchases account, these are stocks that we buy, like Trade Kings. We find that they sell a variety of different commodities. You find maybe you got some soap from them for resale, you put them in a shop, not okay. So I put them in the shop. So I have the Trade Kings here. So these purchases, so meaning that these purchases came from Trade Kings. So how much? 540. Then let's get down to the other question, the other one. So meaning that the double entry system is between purchases and where they came from. So you just have to look at where is the other entry coming from. So here purchases came from Trade Kings. So these are the two things that are involved here. Let's get into what happened on July 5. Recorded sales on credit. Okay, for how much? 450 to Chongwe Council. So what are the two accounts here? What are the two accounts that are involved?
Sales and Chongwe Council.
Yes.
Sales account and Chongwe.
Yeah, thank you very much. You are now following. So the term credit shouldn't confuse you. Just understand that we sold these stuff. We sold the sales were made on credit. So meaning that Chongwe Council is our data. A data is somebody that who buys on credit. If I buy for a chicken from you on credit, you'll be called the data because I'm owing you. So as we'll be going bit by bit, I'll be explaining to you the bad dates and other things. Okay? So we don't want accounts to seem as if it's very, very complicated. That's why we're trying to summarize it because it can be detailed, it's bulk somehow, but what is important is for you to understand the catch. So meaning we are going to open it, we are on number 5, we're going to open sales account. So I can open it on this end. So we open sales account and the Chongwe account. Okay. Yeah, because it's the most. All right, so now meaning that we are getting down to the sales for people to Chongwe on 5th. So meaning it will be okay. So you just say 507 19. That is 19 Then here you say Chongwe. How much was it? And then here, these ones they received. So on the same date they received. So this was a credit. This was a debit. Sales are always have a credit balance because we give away. Yes. So
So are you following? So for us to really understand the posting of these individual accounts, we need to understand the principles. So we'll go through this question thoroughly, step by step, in entering the ledger account. But firstly, I want to assess whether you understand which accounts are there. Remember, from what we discussed here, to say for you to record, you need to understand which elements are being affected. Let's identify which elements are there and what correct entries we need to have. Now, for us to really have a quick way of understanding what goes where, there's a simple principle that we have, which is called PAIRS. P-E-A-R-L-S. So debit, credit. So all purchases usually have a debit balance. So all expenses have a debit balance because you're enjoying the benefit of that particular service. All assets have a debit balance to increase them. So whenever we're increasing assets, we buy anything, we are debiting to increase it. Then revenues or gains, to increase them, we credit. Liabilities, to increase them, we credit. Sales, to increase them, we credit. So in accounting, we don't minus. The opposite transaction will reduce the particular transaction at hand. For instance, the opposite of purchases is sales. Or the opposite of sales is sales returns. So we put it on the other side. So I just want us to identify the elements that are there quickly before we go into posting in that. So I want you to participate. So which two accounts are there? Let's look at January 2. Purchase goods for resale on credit from TradeKings. Can you identify two elements or two accounts that are there? Which two accounts do we have?
The purchases account
So the purchase account and what?
and TradeKings
And
and
TradeKings.
TradeKings account.
So according to PAIRS, the purchases account always has what kind of balance?
Debit.
Debit balance.
Debit.
Then who's TradeKings?
Credit.
Credit. So
TradeKings is
credit balance. Okay. So January 5, what two transactions do we have here? Identify the two elements. So recorded
Sales and
credit from Chongwe.
sales account.
The sales account and
Chongwe.
Chongwe cancel good. So sales, according to PAIRS, has what balance?
Credit. Credit.
Credit, correct. Okay. Then who's Chongwe?
Chongwe is a debit.
Chongwe is a debtor, all right? So all debtors have a debit balance. Then paid rent on office premises by check. So which two elements are we looking at?
bank and
Office rent and bank.
Good. We don't open a check account, it's bank account and rent account. So if we're going to open the T account, what will happen on the rent? So we have rent and what? And bank account.
DR. Debit.
So rent will have a what? A debit balance because it's an expense, right? The bank will
Yes.
credit balance in this case because we're reducing the asset of a bank. Assets are things that we own. So if we're reducing assets, we do what? We credit, so it will come there. All right. Great. So the first thing you need to identify the elements. All right. How about withdrew cash from bank? Withdrew 800 from bank for business use. Okay. Which two elements do we have?
Bank and cash.
Bank and cash. All right. So which asset is increasing and which asset is reducing? So the bank is giving away some money. So we're going to say the bank will be credited and the cash account will be debited, because we're just withdrawing money from the bank, just putting it on the cash, on the cash till. So this is what we call a contra entry. It's happening within the business. But if we said withdrew 800 from bank for personal use, we have a new kind of account, which is called drawings account. So we have a drawings account and the bank account. So the bank account will be giving out, the drawings account will be increasing. Drawings usually reduce our capital. So here recorded sales in cash. Which two elements do we have?
Sales and
Sales
cash
and
accounts.
Good. So what happens to sales? Always sales, whether it's on credit or in debit, sales have a debit entry. Okay. Okay. All right. Then paid insurance for 145. Insurance is what? Is an expense. Okay. And cash here is the asset that is being given out. Bought goods. Goods returned at a value of 180 by Chongwe Council. So this is what? Sales returns and Chongwe Council. All right.
Yes.
January 27, which two elements are we identifying? Bought delivery van on credit from Toyota Zambia. Which two transactions, two elements are we looking at?
Asset accounts and Toyota.
Good. There's a Toyota and what? And the van itself. So the van is an asset, Toyota is our creditor. So we need to identify where we debit and where we credit. So this was just a preamble of what assets are going to be, what accounts are going to be open. So now we're going to look at this entire question. We post it to the respective T accounts and balance them up and send them to the trial balance in that order. So please remember these concepts. So I'll send you the link shortly so that we follow pairs and also deposit the respective entries. We post them to the respective accounts. All right, you can get a screen grab of this for now. Then I'll send you the links that we do the question as it's supposed to be done. So I'll give you 5 minutes to also try it on your own within 5 minutes, what I've just explained, so that as we do the postings, we are moving together. So 5 minutes break that will give you, but keep trying to do the postings as I have guided. Then we go through the entire question and balance it up.